Hi guys, welcome back to Monetize. Now I'm going to record the all new episode of the weekly preview section of the world markets. It's recorded every week, every Sunday for you guys. The text version is already there on my website. The link is given below in the description. Go and check it. Last week's analysis was really up to the mark. The market behaved exactly as the analysis given in my weekly blog. Now, please don't get it wrong. This is not the game of prediction. This is a game of probability. I do read the charts. I do mark my levels of validation and invalidation. I get ready beforehand the market opens on each Monday. Same thing you can apply to your trading. If you want to learn the concepts, do check my courses on the website. All right, guys, so let's hit the charts now. Let's begin the weekly analysis on the charts. To begin with, we are on DXY, the US dollar index, and as usual, I'm going to start with the monthly time frame. I'm going to remove all the extra lines, clearing up the chart. As per the monthly time frame, the pattern is still bullish. MACD histograms are rising, the MACD moving lines are also rising. Nothing against as of now. And if you want to check on the charts, mm, the level we can find here is here we are. That's it as per the monthly. I'm switching to weekly. As per the weekly, this is the next level inside around 98.5 to 98.8. This is what I've mentioned on my text version. The week closed with a doji candle. Doji candle is a pattern which has minimal body structure and it's an indecisive candle. Okay, the MACD is still bullish, so we do not have anything against on the monthly, and we do not have anything against the bullish pattern on the weekly. Everything is bullish. Switching to daily now. Daily, we do not see any signs against except this slowdown. Check the histogram high, the previous high, and the new high. The latest high is higher than the previous high. So it's higher high on the MACD lines. So nothing against on the daily as well, except that it has reached a level which we were anticipating, which was given in our previous weekly blog, and it needs a correction right now. This is the level of support, and I'm going to mark the rising trend line. So it becomes the horizontal support level, which coincides with the rising trend line support. So in case we get a correction right now, it will be a temporary correction to the support, this area. And from this area, we can expect the bulls to take control and take off. I have a reason for that, for the temporary correction, which I will show you on the 4-hourly chart. Switching to 4-hourly. On the 4-hour chart, we can see a bearish divergence on the MACD histogram and the MACD moving lines. Bearish divergence means the bullish scenario is now slowing down. The bullish momentum is now slowing down. So we can see a corrective move, which I've mentioned as on daily till this level. Okay, so I think it's pretty clear. DXY. Let's move on to gold. As usual, we will begin with the monthly time frame. Monthly, we don't have much to analyze. It's as it is, no changes, except I can draw this falling trend line. That's it. Let's check on the weekly. Weekly, see what I mentioned in the text format. High, lower high, again lower high, correct? And if you draw a rising trend line from here, you get to see the lowest point. I'm taking this as the lowest point, reason being this candle has a long wick, the base is almost equivalent to this low. So I'm just marking the lowest candle, higher low, higher low. So what is going on? It's now locked between the falling trend line and the rising trend line. So the price is doing movement within the boundaries. And finally, I'm expecting it to break into the upside direction and continue the bullish pattern. This is what I've explained on my text format. I'm removing all the drawings to keep it simple, to keep the chart clean, and let's check on the daily now. Daily, this is the zone 1830. Tested multiple times. Finally, we broke through, but could not sustain above it. It was supposed to be retested. It was supposed, after hitting this resistance zone due to falling trend line, if it would have been retested in a successful manner as a support, we could have seen a bounce. We didn't get any bounce. Instead, it crashed directly and reached to the rising trend line. Rising trend line, this one. Correct? So now we have two possible scenarios. Number one, a zigzag within the triangular pattern, and finally a breakthrough. Number two, a bearish break. First, let it break the rising trend line. Second, if it breaks below this area, this is around 1760. If it happens, then let it come down, make a retest of this level, and finally it will continue downwards towards the previous low, which is around 1678. If you want to check on the charts, this is the level I'm talking about. All right, let's move on to the next instrument, which is WTI crude oil. WTI crude oil. Let me switch to the weekly chart. I'm removing all the drawings. See, last week I was expecting a bearish pressure because of the bearish divergence on MACD, bearish divergence on RSI. Okay, guys, and it behaved exactly in the bearish direction. Now, this is the low I'm looking forward to, which is around 61. Let's move to daily chart. On the daily chart, we have a level here which is around 75.5, 75.3. So in case we get a retest, hopefully it should act as a resistance and push it downwards. If it happens, it's going to complete the pattern like head and shoulders. This being the head, we already have a left shoulder in place, and if it hits this area around 75.5, 75.3 and bounces lower, it will complete the right shoulder. So it's still projected, imaginary. Let it happen. And the invalidation point, if it breaks, above this resistance, which is 75, makes a retest and bounces higher, then it will be a bullish continuation pattern. As on H4, we still don't have anything bullish. So I don't see any bullish reversal happening soon. See the pressure on MACD. The histograms are clearly downwards. All right. I hope it's clear. Now I'm moving on to the final instrument, which is Nifty. This is high and higher high on the price chart. Let me zoom in. See, this was the high and the latest high. The latest high is a higher high pattern on the price chart, whereas we got a lower high on MACD histogram, MACD moving lines. So this is a bearish divergence, and we were expecting a bearish breakout, which happened. I'm moving to daily. On the daily, we broke below this important support level. So it was a confirmation in the bearish direction. The market paused, made a small retest if you joined like this, and continued lower. Now, as I've shown you the head and shoulders pattern, which is a bearish pattern on WTI crude oil, a similar pattern is visible on the Nifty chart. Let me take the head and shoulders tool and mark it for you. This is the left shoulder. In center we have a head, and this is the right shoulder. So it's a bearish pattern of head and shoulders, head, left and right shoulder. Okay, and there's a concept: the market usually duplicates in a head and shoulder pattern. What I mean, from the head, this is the top. If we make it to the neckline, this will be duplicated. So I'm just taking a double of it. So this area is around, one sec, this level. You can see it on the chart. This is the level. Which is around 16,200, 16,300. This is the target number one. And if it continues lower, then this is the second zone. Which is between 15,500 to 16,000. On the lower time frames, we may see a pullback. I'm removing all the drawings to keep it simple and clear. And we may see a pullback to the previous support levels in between. So we can expect the market to do something like this, a pullback to the previous support, now behaving as resistance, and continue lower to 16,200 or maybe 15,500. Alright guys, I hope the charts are clear, and please do hit the like button and subscribe my channel. Thank you. Bye bye.